In this video, I'm going to go over the difference between a break of structure and a liquidity grab. From having a look at people in my Discord server and online, I can see that there is a clear misconception between the two. A lot of people tend to mistake a liquidity grab for a break of structure and a break of structure for a liquidity grab. So let's get the record straight. What is the clear difference between a liquidity grab and a break of structure? As always, before we get straight into the video, make sure to subscribe, give this video a like, and follow me on Instagram to see what I do on a day-to-day basis. If you don't know already, I have recently released a brand new free Discord server for those learning and wanting to grow and become profitable and consistent smart money concept traders. So go ahead and join using the link in my description and join a fast growing community. So without further ado, let's get straight into the video. So what's a breaker structure? So a breaker structure is when price is trending in a certain direction and then it breaks out of that trend. So in terms of theory, it would look like this. So price is trending to the downside like this, and then we get a breaker structure to the upside, and then price begins to move in the opposite direction, and the breaker structure will come in at this point over here, and that's what we generally refer to as a breaker structure. So now what's the difference between this and a liquidity grab? So a liquidity grab tends to be something like this. So price will be moving to the downside but also building liquidity as it goes, and what we could have is price pulls up like this to grab this liquidity to the left, and then pulls down and then continues the trend to the downside. And generally this is what we see, and as we can see, there would be a lot of liquidity over here, and that's what price has gone and grabbed with this. Now zooming into this area here, we will notice that price moves in above this area just to reach all the liquidity that has been built up over here above these highs, and move back below the liquidity very quickly. And this is usually within 2 candles or within a single wick. And that's the most important part. Liquidity grabs tend to be very fast. There tends to be a lot of momentum in the move for a liquidity grab, and price reverses almost instantly once it has achieved its target of grabbing all of the liquidity. So now let's have a look at some examples on the chart. So as we can see here, we do have a liquidity build up. So we can see there's liquidity to the downside, and this is indicating to us that the true trend is to the downside. We also have liquidity built here in terms of equal highs. Now this is not something that a lot of people would see. It's something that you would see with a trained eye. And as we can see, we have liquidity here. And we also know the trend is to the downside. So if we look from here, so price is trending to the downside very nicely. And what does price do? It pops its head up very quickly, grabs the liquidity, and it drops. Okay, and then it continues the trend to the downside. So this example is very, very interesting. And it's almost a textbook liquidity grab. Price is trending to the downside, as we can see from here, and we get this nice move to the downside. Now price pulls back up, and at this point everyone's thinking it's a retracement, so they're looking for shorting opportunities, and as we can see, we do not get one. And then we get price pop its head up above this area here. So if I just mark out this high, so we can clearly see we actually get 2 liquidity grabs. So one which is very, very slight, and we can also call this relative equals. At this point price retraces a bit, you can see the very correctional choppy retracement, and then price gives us one massive liquidity grab from a massive candle. This could have been a news candle, and it's taken out this high. Now a lot of people would have mistaken this for a breaker structure, and they would have been looking for some type of continuation to the upside. However, as we know that the single wick doesn't really count as a breaker structure, and we knew it was a liquidity grab because obviously there would have been a lot of liquidity above this high here, price continued and it went and moved to the downside. So generally that is the difference between a liquidity grab and a breaker structure. Breaker structures happen when price looks to reverse a trend and is generally confirmed by more than 2 or 3 candles that break above and stay above the high or low that was broken in the trend. Whereas a liquidity grab is a very fast movement, tends to most of the time be a wick that breaks a high or low, but can also be 2 or 3 candles that quickly then reverse back into the trend. So I hope what I've just gone over does clear up the difference between a liquidity grab and a breaker structure. And before I end this video, if you haven't already, make sure to join my free Discord server. Link is in the description below. Subscribe to my YouTube channel, give this video a like, follow me on Instagram, and I'll see you in the next video.